You've been listening to the Fed. You heard Jay Powell in his Jackson Hole Symposium speech. Are you concerned too?
I have been very concerned about the Fed policy, Kathleen, and the Friday speech that Chairman Powell gave to Jackson Hole made me even more frightened in terms of what was ahead. Essentially, given the fact that home prices are rising at a record rate, as you discussed a bit earlier, and you have rents are increasing, and inflation month to month on the CPI hits the numbers that we haven't seen in decades, the chairman continues to maintain that it is all transitory. So I don't know where his evidence comes from, if there is any evidence at all. And the fact that the tapering, if it happens, will be at year end, means that you're going to have another several more months of $120 billion of bond purchase. Okay. Home prices are increasing, but he will.
So.
Sorry, go ahead.
Thank you. So in terms of the bond market, Jay Powell, because he says, look, this big inflation spike is largely due to things that happened because of the pandemic. Used car prices got more expensive, et cetera. That's why he thinks it's going to be temporary. Is the bond market being too complacent? They seem very convinced by Powell's argument inflation's going to start coming back down, and we don't have to worry about an early taper or earlier rate hikes.
The bond market is complacent, Kathleen, and I think the bond market is banking on the fact that the Fed can step in and keep purchasing the bonds and push the yield down. So the question is, do you want to fight the Fed? And my answer to that question is, yes, you need to fight the Fed, because the Fed cannot win at all times. We have had times in history when the Fed goes to extremes, it doesn't anticipate what is going to happen, and then the whole thing fails. One example was the effort to keep interest rates, bond yields under control during the 1940s, early 50s, and it just collapsed. 2008, the Fed did not foresee the crisis. So Fed is not omnipotent, they are not omniscient, and that's the problem.
Sri, we just had that blockbuster news out of the Chile Central Bank, 75 basis points in this tightening cycle. We've seen, of course, Bank of Korea move as well. Clearly, emerging markets have less time to kind of mull over these things. What does it tell you that they're so worried about inflation?
You make a very good point, Heidi. I have covered Chile since 1980. And whatever the administration was, the central bank has always been an austere, conservative institution. Another example, the Bank of Russia is the same way. You think about the Bank of Russia president speaking, the governor speaking, and it feels like you are at the University of Chicago economics classroom. So these central banks take their jobs very seriously. They are truly independent central banks. And unlike the United States, which can get away with excesses, they cannot. So I think they are being very careful. You see that in Chile, as we saw today with a big rate increase. Russia has been doing that consistently. Brazil has been hiking as well. So you see that in different parts of the world, but not in developed countries.
China, obviously there's been bargain hunting, there's been bottom fishing. Is it possible to gauge the adequate discount on a lot of these companies given the regulatory uncertainty?
It is not, Heidi, and I think your question is timely. And the reason you are not able to put an adequate valuation is that it is not just a Huarong risk or an Evergrande risk. It is the China country risk or sovereign risk has increased. That's what you see. In other words, you can't just analyze on a bottom-up basis. You have to look at China from top down because of the increased risk.
So are there sectors that you would see to be, opportunistic on, that are less likely to fall within any of the main themes of, common prosperity, of the sort of morality-driven policies that we've seen from the government?
It is very hard to judge because let me give you an example. The tutoring crackdown, which came down a few weeks ago, was a big surprise because it was unlike the technology leaders, they were not challenging the leadership of the country. Still, it was considered to be increasing the class divide, making the rich people alone able to pay for their children to get the higher education, the tutoring, and the government came down on it. So it's very difficult to predict 1 year from now, 6 months from now, which sector is going to catch the government's attention. So I would say, yes, give it a greater discount for the companies, but also look at the country much more carefully than you did before.